It's refreshing to host this conference in an entirely new way, and we're genuinely excited to do this. But the environment in which we're operating could not be more serious. Those with responsibility to help rebuild Europe are here today.
The challenge now is, as we are in the midst of the crisis, is to accelerate the digital changes to enable us to function more effectively and to help clients adapt.
I think it's quite clear that a COVID-19 recovery must be linked to a green transition.
My opinion, a recovery, either it is green or it is not a recovery.
And Europe is clearly leading the way on the green recovery, with many efforts that are focused on the financial sector, because without our participation, we simply cannot meet our climate goals.
That in fact, responding to COVID-19 and to the climate crisis can be done through a consistent and coherent strategy. EIB looks forward to playing its part in that agenda over the coming years.
As crisis has hit all the sectors of the economy, I think we shall expect a stronger cooperation across the EU, in particular also between public and private sectors, to identify areas of intervention, but also to build tools and processes that will help in making Europe more resilient in the future.
Sustainability together with technology are really the two names that recur more frequently in today's world.
For Europe's economic recovery, I see financial sector playing a major role. Yes, it will be challenging, but it's also a time of opportunity to focus on resilient and inclusive recovery consistent with long-term sustainability.
Good morning. Welcome to the annual Financial Services Conference in Brussels, number 19, virtual again, hopefully for the last time. I'm David Reed from Kreab, Dan Kraft from Forum Europe. Welcome you to the event. We hope we're back in person next time. Dan will take you through the virtual platform in a moment, and so that you can get the most out of the features. Being virtual also gives us the opportunity to welcome guests from around Europe and around the world. So welcome to you all, and thanks for joining the discussion. Thank you to the conference hosts, to Barclays, to Generali, to colleagues at Kreab and to Forum Europe, and to our event partners, to BNP Paribas Fortis, to the London Stock Exchange Group, and to Bloomberg. Today we take stock as we start to re-emerge from our forced economic and social hibernation, and look again at our economic model and the partnerships we need to build a more sustainable, digital, competitive, and responsible system. So on behalf of the hosts, we're honoured to introduce you today to Europe's protagonists from the financial sector policymaking community, from the European Parliament, the Council, European Commission, European Central Bank, and leaders from insurance, from payments, from technology, from infrastructures, asset management, and banking sectors, and also experts on European political issues, policy, and regulation. After lunch, we're also extremely privileged to host the principal financial services officials from the Europe, United Kingdom, United States Financial Services Dialogues to discuss cooperation, coordination, and how to manage any inevitable differences. Dan, perhaps you could take us through how the platform will operate and today's logistics.
Thank you, David. And I'd like to start just by adding my own welcome to that of David's, both to those of you who are joining the event directly here on the event platform. And also, I think this opening session is actually being streamed live on Twitter. So also a big welcome to anybody who is joining us in that way as well. And we're delighted to have you all with us. So for those of you who are here with us directly on the virtual platform, we wanted to start, or I just wanted to start by taking a couple of minutes to talk through some of the interactive features and different areas that we have on the platform to hopefully enable you to make the most of your time with us. So to run through some of the different areas that we have here. So first of all, you're all now watching this session, as you'll be watching all of the sessions and all of the panels that will be taking place in the stage area. So all of the content throughout the day will be taking place in this area here. Think of this as your main conference plenary room, I suppose. So all of the sessions, as I said, will take place here. And whilst watching the speeches, whilst watching the discussions, you can post your questions and your comments for our experts in the chat area, which you'll see on the right-hand side of your screen. And we do please encourage you to do that, to please make use of that, to give your questions that you have, also any comments or any thoughts that you have on the discussions. Please do use that area there. We want the feeling of the event to be as interactive as possible. Secondly, and still on the right-hand side of your screen, under the event tab, you can see there's an event tab and a stage tab there. If you click on the event tab, you can then view the attendee list. That'll enable you to view the list of participants at the event. It is also where you can start to connect with other participants one-on-one. You can actually click on people's names, start a text chat conversation with them, and even invite people to a private one-to-one video conversation, which can take place either straight away or you can schedule that with people for another time during the day. So please, again, do make use of that. And it's an opportunity to hopefully to network and to meet with some of your fellow participants as well. Thirdly, we're going to be running live polls during a number of the sessions today. Again, on the right-hand side of the screen, you can see a polls tab. When the polls are open, they will appear in that tab there, and the moderators for each session, will be letting you know when the polls are open, and you'll be able to give your thoughts again on issues, and the results of those will then be brought again into the discussions as part of the sessions there. Next, moving on to the left-hand side of your screen. So on the left-hand side of your screen, you have the main menu bar, and you can see below the stages area that we are in now, there are two other tabs labeled Networking and Expo. So the networking area is another area that's designed to give you a chance to meet other attendees. This way is actually done a bit more spontaneously, and the idea is to maybe try and replicate the way of meeting new people that you get at face-to-face events, maybe during networking breaks and things like that. So at specific times during the day, we'll be inviting you to use this area, to go into that networking area and clicking on the connect button in there, which will then randomly match you up with another attendee who is here on the platform. And you will have, I think, about 3 minutes. You have a short time there for a conversation with them before choosing if you wanted to then swap virtual business cards and exchange details. And to reiterate, all of these conversations are, of course, private and they're one-to-one. Finally, to talk about the expo area, so the last tab on the left-hand side, that's where we have some exhibition stands, some virtual exhibition stands from some of our event partners. There's also going to be some videos being shown there. There's going to be downloads, lots of content to have a look at over there. So please do make sure that you head to that area at your leisure throughout the duration of the event and check out what's going to be going on there. Final thing just to mention, just so as not to leave out, as I said, those people who are following us via Twitter, we have a hashtag running for the event. So for anyone who is following via Twitter, or for anyone who's on the platform who wants to tweet about the event or to follow what is being said about the event, please do use the event hashtag, which is EUFSConf21. And I think my colleagues will post that in the chat on the platform here as well for anybody to use that too. So that's the top line summary. But if you have any questions or need any support during the event, my colleagues are in the chat and are active on there. So please do just post any message in the chat area on the right-hand side of your screen, and one of the team will come back to you very quickly to help with anything that you need. Once again, thank you everyone for joining us. We're looking forward to a really interesting day. And David, with that, I'll pass back over to yourself.
Thanks, Dan, and also to all your team behind the scenes. So we can turn to our first discussion. I must start with a brief apology for those that you're expecting. Arlene McCarthy from Bloomberg, she sends her apologies at very short notice. She's been unable to attend, sends her best wishes for the conference, and I will stand in and take her place. But with Anne, Gabriele, Francesco and David, we're going to have a privileged glimpse of the boardroom discussion, what's on their minds for really Europe's most relevant, thoughtful financial institutions, all of whom engage fully in EU affairs in Brussels and indeed wherever they operate around the world. We're going to hear their views on Europe, on investment, on risk, opportunity and regulation. So I would like to warmly welcome Gabriele Galateri di Genola from Generali, Francesco Ceccato from Barclays Europe, Anne Richards from Fidelity International, and David Schwimmer from the London Stock Exchange Group. We have about an hour, just under an hour for our discussion. I know some of you have commitments shortly after 10. So we will start with what's on your agenda and outlook. Gabriele, I would like to turn to you first. This will be an interactive discussion amongst us. But please might I turn to you to kick us off. What's your view on the current economic situation, and really your thoughts as to how governments have responded to the economic fallout of the pandemic? Please, the floor is yours.
Thank you very much, David, and thank you very much for inviting me to this meeting. I'm very excited to have the chance to speak on this subject. Well, the first question is a very nice question these days. I mean, how can I answer differently than saying that I'm rather positive after I saw the latest forecast from the IMF, the OECD, the Central Bank of Europe. I mean, we hear numbers like 5.6% GDP growth for the world, 4.6% for Europe. In Italy, we started the year with a forecast of 4%. Now people go, like the Bank of Italy, up to 5%. So this is really an impressive change compared to last year. Just remember that last year the GDP went down by 8.9%. And what are the reasons of this positivity? First of all, of course, the vaccination programs. I mean, I was reading the numbers this day. I mean, we're down to 29 deaths in Italy. We were 300 people dying, some 3-4 months ago. We have, monetary and fiscal policies around the world, but particularly in Europe and also in Italy, that are, supporting the development of the economy. We see real signs of pickup in the industrial production, for example, in Italy in the last few months. This has really moved up, and by the statistical impression I have moving around the country and during weekends and so on, even the services area are picking up, and still a few foreigners, but a lot of Italians moving around. And last but not least in this list is certainly the factor that in Italy is called Mario Draghi. Mario Draghi is really giving a boost of trust to everyone. And my feeling is that it is giving the same, push of trust, not only in Italy, but also in other countries, and certainly also at the European level. And talking about Europe, of course, the big game changer that we've seen in the last, 12 months has been the Next Generation EU. Not only for the dimension of this amount of money that is going to be, given to the European countries in the next few weeks already, they will start. But also because it was a sign, at least seen from Italy, a sign of coordination and solidarity that we had not seen at the beginning of the pandemic, that we have seen with a lot of strength from Ursula von der Leyen, from the head of the parliament, Sircelj, for all of the different ministers. So this is really because, sorry if I interrupt, not only because of what has happened, but because it indicates a certain trend for the future that I hope will develop also in the strategic and political attitude of the European Union. Europe has always been lacking a little bit of real unity apart from the marketplace. And now I see the road for better integration, of course, not immediately, but also in other fields apart the economic one. And all this, so I'm rather positive on what the governments are doing, referring to your question, certainly in Europe, but also around the world, the US, China, all the major countries are following the same path. And now one last comment on business. Our business has been very resilient. As an insurance company, we've been resilient even in 2020. But the first quarter of 2021 really has indicated that things are picking up. And we were up 11% in our operating result compared to the first quarter of 2020. And our Solvency II ratio, for the people that understand what that is, for the insurance company, is that sign of solidity, went up to 224 compared to a minimum 100. So you can see that things look bright. Of course, I don't forget, the difficulty, inflation, that might be around the corner, some complexity that, might come up in terms of the supply chains. But overall, let me say that I'm very happy that I'm at this stage, and I look forward with optimism to the future.
That's a very encouraging start to the conference. I'm interested to see whether the same perspective is echoed by others. What's your perspective, Francesco?
So thank you. Good morning, and thanks for hosting. And it's obviously my privilege going second to agree with a lot of what Gabriele has said. I'd go a little bit further than positive. I'm optimistic. I think Gabriele has mentioned a lot of the things that I'm optimistic about. Obviously, vaccination effort progressing at pace across Europe. Infection rates, by and large, coming down. And I think there are some additional elements, perhaps, not only the fact that there is the Next Gen EU program, but the agreement to actually operationalize that through the issuance of new common debt instruments that demonstrates a degree of mutualization of fiscal policy, but also things like the agreement around the EU digital COVID certificate, which will help reopen travel and facilitate movement within the EU, which of course is a privilege that EU citizens rely on, the freedom of movement. And obviously we're delighted to help support the EU issuance under the original SURE program. And we do think, as Gabriele does, that the Next Generation EU funding plan is going to be a game changer, but not only, for the economic recovery, but also for some of the other initiatives, including for the development of European capital markets. And I think similarly to Gabriele, to see 27 member states come together and all ratify, the own resources directive to create that program was really impressive. I think in terms of what I see as being important, making progress on opening up travel clearly is very important for individuals and businesses, because the business, for example, that I'm running, it can operate and succeed in this sort of remote environment, but to thrive in the long term, we need to start seeing each other and our clients. And if we can get that travel going, that can also be a way to release some of the pent-up savings that would provide an extra boost to the economies. A couple of other reasons for being optimistic. In our industry in banking, capital and liquidity ratios are very strong, not just for Barclays, but right across the industry. And I think banks in this crisis have proven to be, critical to the recovery, acting as a funnel for government aid schemes, but also as facilitators for capital market access when revenues dried up for certain businesses during the lockdowns, and provided the liquidity needed to overcome the direst period of the pandemic. And so, and in our consumer businesses, we've seen some pandemic-related slowdown, but we're also seeing, I would call, an incipient reawakening as the economy is reopened. And I think, as Gabriele said, the ECB just come out with forecasts for economic growth that actually exceed our own analyst forecasts, even though the Q1 GDP print was weaker than what the ECB itself had predicted. So there is a swing back that is very much expected. In our case, our investment banking and capital markets business had been operating at full pelt over the past 18 months, which obviously for us has helped in terms of our universal banking model and the resilience we get from that. So I am optimistic, right? But I don't think we're completely out of the woods yet. So we still need to spend a moment thinking about the potential of virus mutations. And we have the potential to see an uneven recovery between sectors and regions. And of course, that's one of the things that the Next Gen EU program tries to address, is to have targeted support for regions that may have a less prominent path to recovery from the general economic activity. And the other thing just to keep in mind is that insolvency are actually below a long-term average at the moment as a result of the government support. And it's not clear whether they go back to the normal rate or higher than normal once the government support has been withdrawn. So we've looked at those downside risks here at Barclays and taken a pretty conservative approach in terms of our provisioning, certainly relative to some of our peers. Our provision coverage remains high. And if we combine that conservatism with the reasons I mentioned for optimism, I think we're probably in as good a place as we can be.
Thank you both for setting the scene. I think I might change tack a little bit, but obviously, Anne and David, if you had something to come in on those aspects, please perhaps you could address that. But Anne, the topic this discussion is called Building Back Better, and it's a term we hear a lot. There's a huge opportunity to restructure, to do things differently. So what does Build Back Better actually mean? What does it mean to your organization, but also the financial sector more broadly? And I think linked to that are the policy levers, that some of which have been talked about and some of which are more on the regulation that is ongoing through the co-legislators. Have we got the right sort of set of rules in the pipeline to help a sustainable recovery? Fascinated by your views on this aspect.
Okay, so thanks very much. And there's really a couple of different questions in there. So I'll try and sort of tease them through as we go through the discussion. I think just maybe starting by picking up on what Gabriele and Francesco were saying just now, I think there's a lot of reason for optimism. I do think, though, we're still in this phase where the mists are still there. We don't really know what's going on at an underlying level with unemployment because of the government support schemes. And the point around insolvency is a fascinating one when you look at, it's not just disparity by region, for example, it's disparity by company size. So in the listed sector, in the large company sector, you've seen leverage levels in general fall, but in the SME sector, you've seen leverage levels rise. And I think that situation around the potential for having created a solvency risk, whereas previously we solved the liquidity risk, is one that we still have to tease our way through. Have we got an awful lot of zombie companies? And I think that is the one note I would add to the general picture of optimism there. I don't think we know yet, and we need to make sure that large companies don't, frankly, disproportionately benefit relative to small, because small companies are so important in the economy. But sort of going back to, David, to your question, I mean, I think 2020 brought two great generational, perhaps even multi-generational challenges to the fore. And the first was obviously responding to the pandemic. And I think we saw through that companies, businesses, the whole economy really having to rely on the support and the goodwill of not just government, frankly, but on their employees, on their customers, to be supportive, on that sort of wider community. to really help society be able then to deliver the basic physiological, the basic psychological needs of safety and good health. I mean, and business played a part of that. And that really brought home, I think, why stakeholder capitalism matters. Your shareholders are very, very important. And I say this as an investor, but it really showed that any business relies on more than just their shareholders or indeed their debt holders. And I think that shows us that we are going through one of these periodic reinventions of what capitalism is defined by, which then takes me on to the second great challenge, multi-generational challenge, which is, of course, how we respond to the climate. And so I therefore link the building back post-pandemic to very much how we lean into that great challenge of responding to the climate. And I think many of the tools and many of the approaches that we were able to mobilize incredibly quickly by that coordinated action of government and policymakers and business to actually help us navigate the pandemic, those are the same tools that we need to think about and as rapidly to respond to this very great challenge of the climate. So you can see COP26 is bringing all of this into focus, and we're seeing climate rise dramatically up the agenda in every single boardroom. But we also saw that businesses that took ESG, and I'm sure David will touch on this, but that took ESG seriously pre-pandemic, actually in general have responded and been able to respond much more quickly through the pandemic. And I think that is interesting. So we saw businesses that had the most comprehensive plans for dealing with disruption actually able to respond most quickly and most creatively in response to the pandemic. So I think there's a sort of very interesting analogy for us to take there. Now, then as you flip into how do you build back greener? How do you build back better? You do have to lean into that point again that Francesco mentioned about the unevenness in many respects of the recovery. We've seen income disparity, we've seen wealth disparity increase as part of a consequence of the monetary policy tools which helped us keep the real economy from grinding to a halt. It was an unintended consequence, but it has been a real one. So we really have to think, how do we get very targeted in those policy responses to make sure that the recovery phase from this, not just the getting through phase, really doesn't exacerbate that. And I think that's where looking at the policy tools around green bonds offers, I think, a very rich seam to explore, not necessarily just at a government level. There is a lot of demand for, the big ticket infrastructure projects, very much led by governments and linking green bonds potentially to those. But I think you can take that to a much more local level. I think you can take that right into, for example, local government bond issuance and linking those to local projects to address that regional point, for example, that Francesco mentioned. I think the other point that I would just put into the mix, though, is one of the things, if we're really serious about building back better and building back greener, we've got to get right is we've got to make sure that this is not a consumer-led recovery or not solely a consumer-led recovery. And where the consumer element does act to stimulate demand, we've got to try and face that into the circular economy, because if the consequence of this is simply to increase the demand for single-use plastics, increase the demand for things which effectively exacerbate the climate problem, we will have failed in our pandemic response, and we will have failed in our response to the green climate issue. So those are a few things which I just throw out there, and very happy to pick up on any of them as we go through the conversation.
Thank you very much, Anne. David, I saw you nodding, so perhaps you were going to come in on that. I know Anne mentioned quite a lot about sustainability, and we're going to come on to that in a moment. But just before we do, what does this opportunity mean for you in terms of building back? Which elements need to be built back, and which points would you highlight as areas to focus on for a more resilient system?
So, David, thank you, and I should say as well, it's great to be part of this panel and at this event. Anne made a number of great points in the remarks she just made. One that I would just pick up on, her initial comments around the deleveraging by some of the large companies, and then the incremental debt that a lot of the smaller companies are facing. We have seen that at London Stock Exchange Group. We've seen that in a slightly different angle, but I would add a little bit of nuance to it, which is that, yes, it has been a very robust environment for large companies to raise capital. It has also been a pretty healthy environment for smaller companies on our AIM market, so our growth market, to raise capital. And some of them are very small companies. So I would make a little bit of a distinction, not just between large and small, where Anne's point is a very valid one, but also between small that are listed and then small that are really in the private markets only. And that is a dynamic that I think we will have to be very thoughtful about and very careful about, because obviously most small companies are not listed, and we do have to put some real thought and effort into making sure that there's the appropriate amount of capital for those companies. But I think, and I'm happy to dive in on the climate issue that Anne touched on as well. Maybe I think that's a topic that you were going to raise in a moment, but I'll wait for your question on that one.
Well, I think you know what I'm going to ask you, but should I just pause? Did Gabriele or Francesco have any comments before I move on from building back? But yes, please.
Yeah. If you allow me, David, I think it's very interesting what I heard from Francesco and David, and the thought that came to my mind is that the things that really are changing is that we have to identify the real new opportunities that this situation is creating. Take, for example, our sector, the insurance sector. I mean, so far, the insurance sector, I said, is resilient, but in my opinion, it can also be an actor for the recovery, for the start, a better world. I mean, just imagine that in Europe, the insurance sector manages around 11 trillion of assets. Not, important part of this is directed towards the sectors and the directions that Anne and David were indicating. We can be very much supportive, for example, not in the direction of consumption, as I was saying, but the direction, for example, of infrastructure development, which to me, the infrastructure investment is fundamental to make all our economies more competitive and to recreate, a level of productivity and competition that is absolutely necessary. And I think that, in that direction, even more cooperation between private and public has to be underlined. So far, very little has been done in that direction. We, as long-term investors, need projects that have long-time view, typically the infrastructure projects. We need more projects of that kind, support indicated also by the institutions, by multilateral banks, by governments. We need better, more clarity in terms of what is sustainable, what is climate friendly, because there's a lot of confusion there. And this doesn't allow investors like us to move in a real efficient way in that position. And the last thing is that the institutions and the regulations, maybe we'll touch again the subject later on, have to be coherent with that objective that has been given by the European Union, for example, in Europe. You cannot have Solvency II, which is the regulation in the insurance business that penalizes long-term investments made by long-term investors like us. This is not, we can develop so many, more supportive, important instruments to support the recovery, because now everything is played in terms of how much are we growing, how much can we grow. We indicated some numbers which are very positive, but we can do even better if we just change a little bit the way we interact between public and private, between sectors. And I'm very hopeful that all this is creating more attention to these possibilities and to these developments.
Well, thank you. I think you made my link back to David for me about where does the investment come from, the fact that it's needed for a sustainable recovery. David, what trends do you see in sustainable investment in capital movements, and also how does that mean your organization responds?
So a couple aspects to this, and maybe I'll just start with the theme of our discussion here in terms of building back better and bringing us back to that. That does mean, by definition, doing things a little bit differently, and in some cases radically differently, and that requires some innovation. there is probably no better example of that than addressing this issue of sustainability and climate change. So a couple of things that we're seeing that are different now. We saw in Cornwall over the weekend, Europe's global leadership on this issue is having an impact. We now have a global consensus to act, and I would say that's probably a relief for all of us. The issue is now time pressure, in that we must move our economies as quickly as possible from operating on a high carbon basis to a low carbon basis, and then as quickly as possible to net zero carbon. And I think in many ways, it's approaching the realm of conventional wisdom, but not quite there yet. The financial world really needs to help drive and fund the innovation that can help accelerate the change that we need. And it's through finance, it's through our institutions, and Gabriele is just touching on this. I think what we can do collectively, and I'll touch on a few things specifically, that will unleash literally trillions in investor capital. And in fact, the markets are already doing this to a certain extent by anticipating the future climate policy direction today before some of those policies are in place. And just as an example of that, if anyone's sort of uncertain about what I mean, take a look at the EU carbon price today versus the start of this year, where it has gone up something like 10x. But every day we are seeing momentum building in terms of the movement towards sustainability. In our businesses, in our FTSE Russell Index business, for example, we have institutional investors shifting their portfolios into climate adjusted indices. On our markets, we have investors asking issuers for more and more detail on climate risk. And it's, I think, very similar to the issue that Gabriele is talking about. So the investor demand to allocate capital to sustainable investment is very much there. And one of the tasks that we have, and I would say we broadly, but it's also something that LSEG is specifically focused on, is to help channel the capital to that sustainable investment. And we at LSEG are doing that by encouraging the industry, regulators, policymakers to converge around common reporting standards, to converge around taxonomies, so that investors can have high quality, comparable and comprehensive data upon which to make these investment decisions. And again, I think this is the issue that Gabriele is touching on. I think the EU's taxonomy on green revenues is a critical part of that. I'm proud to say that LSEG played a role in its early development and have been actively involved in that ongoing development there. Just as important as the taxonomies is that we need to help companies converge around a single standard in terms of disclosure, in terms of disclosing climate risk. The G7 backed TCFD, that I think is well down the path of being the standard. And we can all work together to really accelerate and make sure it takes on universal adoption. London Stock Exchange is working with other exchanges around the world to create norms, to create model guidance on using TCFD for issuers around the world. And we will be rolling that out, we hope, in the coming months before COP26. So I think that will be another step in terms of moving the world towards having these kinds of common standards, whether it's on the taxonomy side, whether it's on the disclosure side. So the issue of climate change, the issue of moving towards sustainability, is a clear demonstration of how interdependent we all are, how effective we can be in building back better if we're actually working together. And again, we see this in a number of different areas in our different businesses, and that kind of demand for the ability to allocate capital to sustainable investment. It's substantial today and only growing. I'm sure Anne has a perspective on this as well.
If I might just follow up on one point, just in terms of, you mentioned the global standards, but and taxonomies, international coordination. Do you think that's really on track in terms of, I suppose, the detail? I mean, in Europe, we've gone quite a long way ahead on some of these areas. more than international standards outline, and there's huge momentum there. There'll be no slowdown. That said, other parts of the world are developing their own taxonomies. What does that mean for international financial institutions? Maybe looking at slightly different taxonomies around the world. Is that inevitable? Could there be more coordination? What do you think is possible there?
So ideally, we would have a single standard taxonomy on a global basis. But the issue with that is that this is a developing field. It is constantly evolving. I think if we put in place a taxonomy today and said everyone around the world should use it, perhaps we are limiting some of the ongoing evolution and innovation that is necessary. So it's important to find that kind of balance between having a consistency of taxonomy that everyone can use, but also making sure that it's still evolving and growing, because, as I said, this is a developing field. I think on the disclosure standard side, TCFD is really establishing that kind of global basis, and I'm optimistic about that. I think that does make sense. I think we'll continue to have discussion, whether it's on the disclosure standards, whether it's on the taxonomies, across some of the leading, I'll call it them, constituencies or stakeholders in this discussion, whether it's the EU, whether it's China, whether it's the US, whether it's the UK, whether it's other countries and other regions. And we have also seen some very interesting and I think important efforts, for example, by the IFRS Foundation to try to bring some global consistency to these discussions. So we're not there yet in a direct answer to your question, but we've made a lot of progress. The EU is playing a really important leadership role, and we look forward to continuing to participate in that.
Thank you, David. I said I'd come to Francesco because you had a point linked to sustainability and the building back better element.
Yeah. So if I can just try to link up some of the points that David and Anne made. I think the role that financial institutions have, as you said, Anne, is to see themselves more as a stakeholder in this recovery, which needs to be green, and to link up with something that David said. The notion that the financial sector needs to fund and drive innovation in this space is something that, again, we profoundly believe at Barclays, because, if we think about sort of what we've agreed to do, we've got really three areas in which we want to demonstrate that we are part of that stakeholder model. First is to become a net zero bank by 2050, not just in terms of our own footprint, but in terms of the financed emissions of our portfolio. And secondly is to provide, a green financing volume of £100 billion by 2030. And then it's also investing our own money. 175 million of our own money is going to be put towards green companies to innovate. And I think one of those examples, David, you probably know this company. We recently put £20 million into Origami, which is a clean tech business that provides trading and automation software to provide power traders with real-time data on renewable energy markets. That's the sort of thing that financial institutions, I think, need to do more of. And I think that is ultimately how we're going to move. Not just in terms of participating in the dialogue around taxonomy, which is very, very important, David. I completely agree with you. But I think in order to have the table stakes, to have those conversations, we need to demonstrate what we ourselves are doing with our institutions.
Gabriele, you've admitted.
Yeah. No, I just wanted to add on what David said before, and also Francesco. I think that here we have an opportunity for Europe to really be, the leader in that field, because the US, was away for some time. China just jumped in, recently. Europe has really stated clearly that sustainability, climate change are a top priority for the entire next generation EU operation. So I think that if we push, strongly for this leadership to become real, then we have a chance that the taxonomy effort will, take over on all the other tentatives around the world. We need to recognize that this is also an opportunity for you to become a real world power. I mean, the world has been, going on in the last decades on the US and China, basically. But, any table doesn't stand with two legs. We need three legs. Europe has the chance to be the third leg, but it has to be convinced that it can become the third leg. And therefore, in cases like this, it has a great opportunity to really be the leader. And in terms of what the companies in Europe can do, I can tell you one thing that maybe most of you have noticed already, but in my company, as in many other companies in which I'm on the board, frankly, all this talk is already becoming a very precise quantitative talk in which we have numbers attached to how many investments we are going to make in green assets, how many products in insurance with social environmental characteristics we are going to produce. These things will be audited. So, in parallel with the taxonomy, what is important is that we start grinding, if that is the correct word in English, on the ground to see things happen, not just saying we are green, we'll be more green. We will invest, for example, in the next 2 years, 6 billion euros in green assets. We will grow by 7-9% in products that have this social environment characteristics. We have a project called Fenice 190 in connection with the fact that our company is celebrating the 190 year of existence, and we will invest 3.5 billion in small and medium enterprises in order to help them to become more sustainable. So these are the things that, in my opinion, have to take place now in order to make all these talks become true and really change for the better the world for future generations.
Thank you. Anne.
Can I just jump in with a couple of thoughts? So really going back to I think a couple of things that David was saying. I'm very sympathetic that from the perspective of individual companies, it feels like every day there is a new questionnaire from an investor like us where they have to fill in and give lots of data, and they're all a bit different. Every week there's a new task force or coalition that they're being asked to sign up to, and it can feel a little bit overwhelming at times. But I do think we are beginning to see convergence around key principles of taxonomies, convergence around certain key principles of the standards that we're talking about. And I believe, just like accounting principles converged over time, that we will begin to move down that path and we will see a gradual convergence. And I think we've just got to keep in mind we mustn't let perfection get in the way of good. We mustn't let perfection get in the way of progress on this. And so keep focusing on that and being willing to do it, I think, is really important. I do think, though, that we have to keep in mind it's not just about perfection in the end state that we're reaching for. The transition is desperately important. And if we're not careful on the transition, there is a risk of arbitrage. There's a risk of regulatory arbitrage. There's a risk of standard arbitrage. There's a risk of arbitrage between different pools of capital. So I think the standards, the taxonomies, all of these things are important. But so too are some of the other levers. I think we need governments to get their act together about what are the tools and the incentives and the nudges that they are going to use to encourage uptake of greener energy, electric car use, whatever it might be. Plus, I think the central bank thoughtfulness around how the tools of monetary policy, of bank supervision, of regulation, whether it's through stress testing or more active intermediation in markets, they are all things that are necessary to make sure that we don't have that arbitrage between different pools of capital. And that is global coordination. So I think there are a number of different things that need to come together in this in order to really affect the transition well, and they're really important.
Were there any other reactions to that? Because we've covered a lot of points, and it shows that because you're all speaking, it's the central theme of the discussion. I know we're going to cover this in more detail later. Otherwise, I might go on to the international elements. And there's a link, clearly a link in the discussion we've just had. Francesco, later on today, we're having a discussion with policymakers from 3 of the leading jurisdictions around the world to talk about how policies are coordinated and how differences could be managed. But what's it like from your perspective as a global financial institution in terms of the current status, really, on international cooperation? How would you characterize the current environment? And maybe explain a little bit about what impacts that actually has for your organization.
Sure, thanks, David. So I'll be brief because I know we're short of time. So for those who don't know, I run Barclays in continental Europe and Ireland. That obviously brings me into contact with people sort of in the UK, US, Asia, and so on. What I see in those discussions is a remarkable similarity of what the current priorities are. So it's basically, as we've been discussing today, the COVID recovery, the climate challenge and sustainable finance, and digital transformation. And so while those are all major challenges and opportunities, they have us all, by and large, pointing in the same or similar directions. And so, what I've obviously heard a lot in recent times is about sort of the European policymaker drive for strategic autonomy. But I think there can be some confidence that other key jurisdictions are thinking about the same issues and broadly moving in similar directions. And so while the EU has experienced some shocks in recent years, it's fair to say, in terms of its relationship with key Western partners, I think that the long-term commitment to the same values, things like democracy, human rights, free and fair trade, open competition, those persist, and there are things, we should be reinforcing. And particularly, in my own world, and the world probably of the people on this panel, the freedom of financial choice. And so, in my mind, in short, I think it's reasonable and understandable to have more strategic policies designed to reinforce long-term resilience and autonomy, but not at the cost of international openness and creating the risk of pushing natural partners away. And if you like, a live example of this in the financial services space is the debate around the location of clearing of euro-denominated instruments. And David and I have spoken about this before. I mean, we're set up to clear wherever instructed by the client. That is the freedom of financial choice I was talking about, and can do so in multiple geographies. But we shouldn't lose sight of why a client may direct us to clear for them at a non-EU clearinghouse, because they are factoring considerations of cost, liquidity, netting, et cetera, et cetera. So that's my general sort of perspective, is that shouldn't lose sight of the benefits of international openness, and we should be looking at encouraging the freedom of financial choice where possible, whilst understanding that there are, policy priorities to support broader development in other jurisdictions. So maybe I'll stop there and hand over to others who want to comment.
Gabriele.
Yeah, can I make a comment aside the talk, maybe bringing back to the subject that Anne touched before, concerning the question of inequality being, created also by this general economic situation. I think that talking about sustainability, we really have to give a great attention to the social aspect of the ESG, program. I mean, social inequality, diversity, help to communities is a very important, element of our activity. And even if I look at it from an international point of view, we operate in more than 50 countries. And one of the common things I hear everywhere, and where we are most successful, in our activity, which obviously is part of our global purpose of helping people, but is really the one to support families, disadvantaged families, communities. We do a lot of action in that direction, and I tell you that there is a response from our own employees and from the communities, which is incredible. I mean, there is an enormous need to pay attention to how this inequality can be confronted. Inequality, as I said, is different. It's not just economic inequality, but it's diversity question again. I'm surprised, like even in countries in Eastern Europe, in Asia, in South America, pay a lot of attention to the aspect of, creating more equality, less diversity, and giving more chances to everyone to progress. I think it's part of our purpose. I just don't want to be a nice guy. I think it is essential to have a better world, to create an environment, not only climate, but a general environment where we operate that is, more supportive, that we are on the right track in order to offer to everyone equal chances.
Yes, David.
Thanks, David. And I just want to pick up on Francesco's comments around the issues, the challenges, the opportunities around strategic autonomy. And I will echo some of his comments. I think it is critically important for the EU to remain open and to resist the protectionist temptation. We've all been through a traumatic period. Some of the politics have become difficult. Some of the nationalism associated with that has been, I think, probably counterproductive from the economic perspective or from the perspective of trying to build back better. But what has made the EU so successful is its openness to the world and being able to embed itself in global ecosystems so that it can really thrive, support its own economy, but also be a key participant in the global economy. So I think it is really important to keep this mindset going forward and should be a key priority of the EU, whether we're talking about sustainability, whether we're talking about digitization. These are big global issues. It's not going to help the EU to fence itself off in any way. And EU firms should be able to access the same liquidity, the same services, the same data and technology capabilities as their peers, as Francesco was saying, specifically with respect to clearing, which is an important issue for us. Now, I'm not stating or I'm not arguing for deference or absence of control by the EU over important strategic areas. I think we have plenty of opportunity in the context of supervisory cooperation. In some cases, we have direct supervision of firms outside the EU by EU regulators. So I think the frameworks that we have can really make this work very well. And the cross-border nature of markets can help protect financial stability by ensuring diversification. And if we have market turmoil, I think it will make markets safer for the benefit of all of us if we maintain that kind of openness. So I really hope that the dialogue, the cross-border access that we have today can prevail going forward in an open and dynamic economy such as the EU's, and so that the EU can participate in that way on a global basis.
Thank you. I think we're moving towards the end of our session. We've had a great introduction to the different areas. In a moment, we're lucky to have Andrej Sircelj, Minister of Finance for the incoming Slovenian presidency of the EU. So I think perhaps we could wrap up this session with, and maybe turn to Anne first. What are the lessons we've learned from the crisis? What are the things we need to focus on, I suppose, in the short term, over the next 6 months? And how has your organization and your ecosystem changed? And are those changes going to revert back as we come out of our sort of forced lockdowns, or are some of those changes permanent? Because this environment is going to shape the way in which we need to legislate over the coming years.
So I made that 5 questions. So I'm going to try and do this.
Pick the ones you like.
I'm going to say 2 things really. I'm going to make 2 points. So one of the big lessons learned is around supply chain and supply chain resilience. So in terms of thinking about our own business, we have in some cases reduced quite substantially our number of suppliers, a number of vendors, in order to have fewer but really strategic partners and get dual and triple redundancy where we need it. And in other areas, we've actually increased the number of suppliers again so that we can match the geographic footprint with shorter supply chains. So thinking about moving to a sort of just in case rather than a just in time kind of approach. Very similar when we think about labour market and where workforces are situated. And I think that's one of the themes that we're continuing to tease out when we also, in our turn, talk to the businesses that we invest in behalf of our clients. So resilience of supply chain, very, very important. I think the other thing in terms of what is temporary and what is permanent is if you look at Europe, and it's not unique to Europe, around the world, savings rates for those who are able to save have dramatically increased, but we've not seen a commensurate increase in investment rates. I mean, it's a bit like Gabriele was saying, it's Solvency II, but there are other more direct mechanisms as well. We've really got to crack this. If European households had reduced their bank deposits and invested more in the stock markets or even bond markets, their net wealth could have been higher. I think Afama estimated by about $1 trillion if that money had been moved in its entirety. Now, we wouldn't suggest that it would be in its entirety, but there is clearly an untapped source of investment that could be used far more productively than it's used at the moment. So I think, again, coming back to the policy options, we need to think about how we rebalance the incentives for debt over equity to encourage more participation in markets rather than having stuff sitting in the bank not doing anything. I think encouraging digital retail investing, so not so much meme stocks, not so much online gambling, but really proper long-term investing through education is a really important part of making this sustainable in its recovery. And finally, that point I would just make as my final point, how we figure out how we recapitalize the non-listed smaller and medium-sized company is really important. Otherwise, we will find this is a very, very halting recovery.
Thank you, Anne. So it's our chance. Final comment briefly from each of you. Thank you very much for all your contributions. An additional remark?
Well, if I can, say from my point of view, the lessons learned is that we have to be extremely flexible in the future because things will happen, unpredictably, like it happened with pandemic, and we have a lot of systemic risk that might come up. I hope not, but we have to be careful about this. We need to have a constant skilling and reskilling and upskilling for everyone. We are in a moment in a world which is extremely dynamic, changing, so we have to be ready for this. And from the point of view of our industry, we have to close really some protection gaps that are necessary: business interruption, health, long-term care. All these things are in our projects and in our expectations, and we are very prepared to be ready for this kind of developments.
Thank you. David?
I'll be very brief given the time, but just to reiterate the point, a closed ecosystem is not healthy for EU firms or for the EU economy. So a focus on sovereignty and strategic autonomy should not mean protectionism. It should not mean cutting off the EU from global markets.
And the final word to Francesco.
Thanks. I think a thought to be spared for our members of staff. I think, they've just been heroic during this pandemic. And I think a lot of them are now expressing preferences about how they'd like going forward. I was recently on another panel where the audience poll expected 92% a hybrid model of working from home and working from office. I think we as leaders need to be listening to them. And I think if we do that, we're also going to be succeeding in attracting and developing talent, as we all should.
Thank you all for starting off this conference, to Anne, to Francesco, to Gabriele, and to David. Thank you for sharing your views.
Thank you.
Thank you.
I now have the great pleasure to introduce the Minister of Finance for Slovenia, Andrej Sircelj. He's known to all of you for his central role in directing from July the 1st the work of European Council in terms of the presidency's agenda on financial services. But it's at a key moment, as we've just heard from our last discussion, a key moment in Europe's recovery, future direction and relationships. So the floor is yours, Minister.
Thank you, and good morning, and thank you very much to the organizers for the invitation to participate at today's conference. I'm honored to be among the participants. So, distinguished guests, ladies and gentlemen, I would like to reflect in my speech key elements of our presidency, and I think that I would like to start by reflecting on these interesting times that we live in. We witnessed a pandemic and faced numerous difficulties. And however, I would like to stress that dealing with all the difficulties resulted in solidarity, sharing best practices, and also joint coordination. The consequences of these common actions are bringing us closer to the reality that we used to know every day. We are in good path, but I think that there are still many challenges that we have to conquer. There are many issues that we have to tackle and many policies that can be improved. Hence, I think that changes will continue to accompany us, and I believe that we can make the best of it. In the light of joint actions, allow me to say a couple of words on the economic and financial affairs of the European Union, since Slovenia is taking over the presidency of the Council of European Union in 2 weeks. The main priority will focus on the recovery and the exit from the crisis. We will work extensively to ensure the approval of national recovery and resilience plans in the Council within the set timeframe. Our goal is to enable the Member States to begin using funds as soon as possible. We will also focus on carbon border adjustment mechanism and digital levy. In addition to that, we work on an important package of measures in the field of anti-money laundering and terrorist financing. Also, Basel III standards will be on the table, and also Solvency II directive. We will also focus on the digital finance package and sustainable package of finance. So now that I've briefly touched upon the work that we intend to focus on at the Council for the Economic and Financial Affairs, allow me to take this opportunity to say a few words about how sustainable finance will help us in addressing climate change and post-pandemic recovery. Because so it's important, we as next presidency of the Council in the European Union stand ready to take the sustainable finance agenda forward. We are aware that climate change is happening and that issues of sustainability call for immediate action. If we want to ensure that the European economy becomes climate neutral and guarantees a healthy living environment and well-being for people, we must prepare reforms and promote sustainable financing. The European Commission has prepared also a very complex so-called sustainable package on 21st of April 2021, focusing on taxonomy regulation. A groundbreaking step was the adoption of the first delegated act on taxonomy, which set relevant criteria to determine whether an economic activity should be classified as environmentally sustainable, addressing environmental targets for mitigation and adaptation. It is important to note that the taxonomy regulation is only one part of the larger sustainable finance framework. The framework also includes the Corporate Sustainable Reporting Directive, the announced EU Green Bond Standards, renewed Sustainable Finance Strategy, and the regulation on sustainability-related disclosures in the financial sector. This could potentially enable investors to compare investment opportunities across borders. It might also create incentives for invested companies to make their business models more environmentally sustainable and resilient. Overall, the sustainable framework provides the basis for the objectives of the European deal, namely to reduce pollution, steer companies towards using clean technologies and producing clean products, and tackling climate change on multiple levels. The main objective of the European Green Deal is to serve as a compass to encourage the prevention of pollution in all relevant European Union policies and maximize synergies in an effective and proportionate way. To achieve the goals of the European Green Deal by 2050, clean energy policies need to be rethought across all sectors of the economy, industry, production and consumption, large-scale infrastructure, transport, food and agriculture, construction, taxation, and social services. It is necessary to include not only an environmental, but also social and governance investments. When we decide to change practices, we must act responsibly towards the environment and towards society as well. Yet I believe that EU's pursuit of green and digital reporting is a welcome initiative that we should follow. However, in doing so, we should be careful to avoid further fragmentation of the EU and global capital markets. I agree that redirecting capital flows towards sustainability is crucial to make our economies, businesses, and societies more resilient to climate and environmental shocks and risks. One of the main challenges will be to find the right balance between the level of regulation of financial institutions on one hand and their role in long-term investments and supporting the economy in recovering from the pandemic on the other. To achieve the goal of reducing pollution and improving environment, we need to raise our ambitions and actively pursue them. In this perspective, are looking forward to the European Commission's Fit for 55 package. Here, I would like to mention the envisaged carbon border adjustment mechanism, which will supposedly impose cost of carbon emission on certain imported goods. I believe that this will improve the competitiveness of certain parts of the EU economy. At the same time, I think it might also incentivize manufacturers who are less ambitious regarding environmentally friendly production to consider their operation. When I look at my country, Slovenia, as a EU and also Eurozone member state, has the potential to create a successful European capital market. This potential has now improved with the upcoming regulatory changes at EU level, environmental, social, and governance requirements, and the opportunities offered by fintech development solutions. This is the reason why we strongly support the Commission's Capital Market Union Action Plan. Building the Capital Market Union is essential and the top priority if we are to develop EU capital markets and ensure access to market finance to support a resilient and inclusive economic recovery. But the Capital Markets Union cannot be built with a one-off package of measures. It is a process. Sustainable development is becoming a necessity that we cannot ignore. We need to put a framework in place quickly if we are determined to achieve our goals in the expected time frame. We need to act now. For this reason, rapid adaptation in this respect will also be necessary in the financial sector, particularly in connection with sustainable reporting initiatives. Despite the current situation caused by the coronavirus pandemic, sustainable finance should remain a long-term priority for the EU. Even so, we cannot forget about its urgency. Perhaps now even more so than before. The adoption of the so-called sustainable package on the 21st of April this year was a clear commitment to sustainability. We look forward to the next steps, to the announced renewed sustainable finance strategy, which all EU should take greater ownership. Please allow me to take this opportunity to reflect on the development potential as well. I think that when it comes to the European Union, there is still a lot of it. On one hand, it lagged behind its potential in the last decades. On the other hand, there are still many opportunities and resources that it can use during the course of future development. Environmentally sustainable economy and digitalization that are in the spotlight due to the Recovery and Resilience Fund are, in my opinion, also important stepping stones for development within the EU and outside. Digitalization carries the potential to provide solutions for numerous challenges. Digital technologies do not change only the way we communicate. They influence a wider spectrum of our lives and work as well. Digital solutions can, with the right approach, contribute to a creation of jobs, enhance competitiveness and innovations, and improve people's lives. However, in my opinion, we have to be careful to turn education towards the technologies of the future, so that its full potential can be exploited in the society as a whole. We have to provide sufficient education for younger as well as for older people. Considering digitalization, we must not forget about the financial education and consumer protection. They should go hand in hand with greater involvement of retail investors in the capital market. Financial literacy is fundamental to individual well-being and a healthy economy. Money is becoming increasingly invisible as coins and banknotes are rapidly being replaced by credit cards and even cryptocurrencies. In addition, ongoing reforms are leading to legislative changes that affects the amount of money available to household consumption. Money is increasingly becoming part of our daily lives, and financial markets have become more sophisticated, making it more difficult for people to manage their finances. However, financial management is primarily the responsibility of consumers themselves. That is why I believe that efforts must be made to enable consumers and investors to recognize the need for financial products. Finally, it is important to further create regulatory frameworks to protect depositors and retail investors and increase their confidence in the financial system. However, for many of the reforms and regulatory measures proposed by the Commission to be successful, strong cooperation is needed from all stakeholders, including the EU institutions and market participants. As I said in the beginning, I believe that the foundations of thriving future are cooperation and solidarity. I think we have many possibilities and also duties to provide for the well-being of our citizens. In terms of the financial area, it is crucial to ensure a sustainable financial framework in the financial market and a stable fiscal system. A stable financial environment, namely, provides more space for innovations and changes. As the world will change in the future, we also have to secure proper education that will provide people with the knowledge for the life and jobs of the future, which also includes financial literacy. Ladies and gentlemen, let me conclude by saying that I believe that in making our decision, we should, above all, act responsibly. While we of course must strive towards improving living conditions, by all means, our actions have to be premeditated and well coordinated. If we want to provide a better world in the future, we have to be responsible not only towards the future generations, but towards our generation as well. Ladies and gentlemen, thank you for your attention.
Well, on behalf of all the audience, thank you very much, Minister, for joining us today. Thank you for the inspiring and also clear direction you set out for your work in the presidency. We wish you every success in this endeavour and look forward to working with you over the next 6 months. Thank you again.
Thank you very much. Thank you.
So I'll hand over now to Dan to take you through the next part and also give you a glimpse as to what's coming next over the course of the morning.
Thank you, David. And just before I do, I'd just like to say a big thank you to you for stepping in at such short notice to expertly moderate that session. I know it's not easy when at short notice, but thank you very much. As I said, excellently moderated. So yes, thank you. So yeah, a fascinating start to the day, and I really hope that everyone out there has enjoyed that insight from industry, and then obviously from the minister as well. So yeah, fascinating start to discussions. We do now have a short break. So I mentioned at the start of the day about the networking area and the expo area, which you can navigate to using your menu on the left-hand side of your screen. Now is your opportunity to do that. So please do, we have around about 25 minutes or so as a break now. So please do make use of that time to use the networking tool to meet with some of your fellow attendees on that. Please do also visit the expo area. You can see we have a number of the event partners who have various videos, downloads, other information and things there. So please do make use of that. And then we are then back here on the main stage, as I said, in around about 25 minutes or so at 11 o'clock Brussels time for our next session, which is going to be looking at ESG and asking the question, is sustainable investing moving into the mainstream? So thank you very much to David and to all of our speakers for this morning's session. As I said, please do make use of those areas, and we'll see you back here in around about 25 minutes. Thank you.